What does it mean to pull all of your money out? Please can you explain the maths? Hi guys, welcome back to my channel. I hope you're all good. I'm joined by Edward again today.
Hello.
Edward is our mortgage broker and we did a video a few weeks ago now talking about mortgages, and today we're going to be talking about bridging finance and development finance.
Sure.
So I've got all the questions from Instagram, so thanks to everyone who sent questions in. So let's just start off.
Sure.
What is bridging?
Bridging it's a short-term loan secured against a property just based on that property as it is now. So if you're buying a house at auction and it's worth 100,000, the bridging lender might come in and lend you 75 grand.
Yeah. Okay.
They're simple, flexible little loans. They're the sort of thing you'd use if you were doing a refurbishment or something like that.
Yeah.
Or in an instance where you couldn't otherwise get a mortgage.
Yeah, so bridging is suitable for like buy, refurbish, refinance deals.
Exactly.
Basically.
Yeah, exactly. Because a mortgage lender is going to want something that is a property that's going to be suitable over 35 or 40 years.
Yeah.
A bridging lender is like, you're doing it for 3 months and then they're going out.
Yeah.
So consequently, bridging interest rates are higher. You might be about 0.6% a month, but it's more suitable if you're doing a refurb job.
Yeah.
Something like that.
Cool. And can you explain to everyone a bit about development finance?
Sure. All right. So that's bridging. Development finance is on top of that bridging loan. You can borrow your build costs. So if you're buying a property for, let's use previous example, 100 grand, let's say. You've got a bridging loan for the purchase, and then you can say, all right, I'm going to put £70,000 into this property. We're going to turn it into something that's worth 250 grand. You can lend that 70 on top of it, based on the gross development value, which is like what it's going to be worth once you've built it.
Yeah, and with development finance, can you explain, because obviously you can't just so say when you buy the property, they're not just going to give you all the money.
No.
They kind of do it in chunks, don't they?
They do. So what they do is, it depends how much money you have, but they will pay you at the end of the month, let's say, for the work you've done that month. So if you put 20,000 into the property in January, they'll send their surveyor, quantity surveyor or monitoring surveyor out to the property and go, okay, you've spent that 20,000 on the property, you haven't gone on holiday with it, here's your next and they refund you those costs. That's generally how it's done. You can sometimes get a bit of a float up front, but it's less and less easy to do that.
Okay, cool. So I'm new to property. How easily can I get a mortgage for a buy, refurbish, refinance deal?
So by new to property, I'm guessing that person's a first time buyer. So you can get a bridging loan. If you're looking to do a refurbishment, it's probably a bridging loan. You can get a bridging loan as a first-time buyer, no problem. The main difficulty a lot of first-time buyers have is deposit, because you probably need a sort of a 25 or 30% deposit for that. So it might be quite a low-value property. But if we can get you in with a bridging loan on the first part, and you come to refinance on, say, a buy-to-let, 3-4 months later, you can do that. And that is a route for sometimes first-time buyers who are looking to do buy-to-let. It's hard to get a first-time buyer buy-to-let mortgage, but one route around using those specialist first-time buyer buy-to-let lenders is to buy on a bridging loan anyway, rent it for a few months, and then just refinance.
Cool. Is there a certain type of requirement for a bridging loan, and is the interest higher than a normal loan? So the interest will be higher than a mortgage. It will probably, by a normal loan, if you mean like a loan from your bank, like an unsecured loan, it's probably going to be lower than that. Because an unsecured loan might be, say, 20% interest. Bridging loan might be 8% a year, 10% a year, something like that. I don't know what the first part of the question means there. Is there a certain requirement? I guess maybe they mean like a deposit or something like that. So deposit is, you're going to be looking at between 25 and 30%. I can get it down with one lender to 15 or 20%, depending on the specific circumstances, but ballpark you're talking 25-30%. The big thing with bridging is you need to be able to, and this kind of goes back to your first question about what is it, but the main thing is it's pretty much entirely based on the property as it is now. All they want to know is
have you got the deposit to get it, and can you safely say, I'm going to either sell this or refinance it?
Yeah.
So the exit is really important. So they're just looking at what their security is, what is the property, and how do we get out?
Yeah.
So for that person, I'd say, all right, can you get in? Have you got the money to put down a deposit? And can we convince a bridging lender that you're going to be able to get out again?
Yeah. Cool. So I guess bridging is more based on the property, whereas say a mortgage, that's more based on you as a person.
There's more focus on you. I mean, obviously the mortgage will still be, they're still going to look at the property, but it's more of a focus on you as an individual.
Yeah.
Because they're lending to you for 35 years.
Yeah.
You know, whereas bridging, it's a short-term little investment.
Yeah. And how short usually is bridging?
Between 3 and 12 months.
Yeah.
You can do it up to 2 years, but you wouldn't want to,
no.
really, if you can avoid it.
Yeah. Can you get a bridging loan as a first-time buyer? Does it require a deposit and a minimum salary?
You can get a bridging loan as a first-time buyer. You'll need, as I say, probably a 25% deposit.
Mm-hmm.
You usually don't have a minimum salary requirement, but we need to convince the lender that you're going to be able to either sell or refinance the property at the end.
Yeah.
And if you're refinancing, you are going to need some income.
Yeah.
But if you're refinancing onto a buy-to-let, you don't necessarily need a certain amount. You could have, you could be earning £12,000 a year.
Yeah. And
we'll get it. But probably it's a good idea to have something.
Yeah.
If you're going to sell it, we might be able to find a workaround.
Yeah, cool. And then another one, can I get bridging finance without a job?
Probably yes, but do you want to? Is that a good idea? Because you're putting a lot of eggs in that basket.
Yeah.
And what happens if something goes wrong?
Yeah.
So yeah, you can, and I'm still going to want to get the business and do that, but we need to have the conversation of is it actually a good idea to do that?
Yeah, just in case.
Yeah.
What companies do you recommend for bridging?
I think you should call up me and ask me so I get paid. But I think that there are a few that I would recommend. I can't make, the problem is as an advisor, I can't give any names without having interviewed people, because then I'm giving advice without knowing your circumstances.
Yeah.
So I'm happy to tell you who I like off camera.
Yeah.
But I can't do it on the internet.
Yeah,
sorry.
Not public information.
No, I can't. They'll hate me for it if I do it. So.
Is it better if you use a standard mortgage for your first property and you're not a homeowner, or bridging?
It depends what you want to do.
Yeah.
It depends what you want to do. If you're looking to refurbish it and increase the value and then mortgage that value, refinance on the higher value, it's probably better off doing a bridging loan.
Yeah.
But bridging loans are expensive, and I get paid a bit more if I do bridging loans. My commission's higher, but I'll always try and avoid it if we can avoid it, because it costs a lot of money.
Yeah.
So if you're just trying to get on the ladder, I'd say keep it simple, because things are easier once you're on the ladder.
Yeah.
But it depends. If you found a really good property and you got your heart set on it, then go down the bridging route.
Yeah.
But the deposits are higher and all that stuff.
Yeah. Yeah, so someone said, do you need a deposit for a bridging loan?
Yes. If you've got an investor, we can deal with that. There are lenders who are okay with the fact you've got an investor.
Yeah.
We should tell them that's what you're doing.
Mm-hmm.
If they find they're okay if we tell them things up front. If they find anything, then it's not good and it makes me look bad as well. So I wouldn't go near anything. But you could technically do it. You could do that sort of highly leveraged thing where you're borrowing your deposit and you're borrowing the money for the bridging loan.
Mm-hmm.
But just as always, just be careful. Just make sure you know exactly what you're doing.
Yeah.
And that's part of my role as well.
Yeah.
Because I want clients to be sort of happy and healthy and not scared because they've put a hell of a lot of money into one thing.
Yeah.
I don't want them to have a car crash. You can. So the answer is yes, you can physically do that. Just be careful and get good advice, I think.
Yeah. How much of my own cash will I need for a buy, refurbish, refinance? Mm-hmm. I've got £20,000. Is this enough?
Funny you mention it. I had a case last week from actually somebody who watched your video who had the same thing. 20,000, first time buyer, looking to do buy, refurbish, refinance onto a buy-to-let, and I did all the numbers, calculated the stamp duty, fees, all the rest. It was coming out to he could afford a property of about 65,000.
Okay.
Once we put all in the, looked at all the valuation fees and the legals and all the rest. Because you've got to be careful. It's your deposit. It's all the costs of the first transaction. So valuation fees, broker fees, legal fees, stamp duty, and then you've also got to be able to afford then your refurbishment, then also your refinance afterwards, so the valuation fee, legal fee and broker fee of the remortgage after. So you've got to have all that in a pot, and it came out to about 60,000 for him.
Right, okay.
I had somebody with 30,000 at around about the same time who was able to afford about an 85 grand property.
Right, okay.
So if you're looking to do a HMO, minimum property value for HMO is about 75,000.
Okay.
So if you wanted to do a buy, refurbish, refinance on a HMO, you'd need about 30 grand minimum.
Okay, yeah.
Because it's that 30 grand gets you will do you that for an 80 grand property. Less than that, you're on single let territory.
Yeah, okay. If I've only got one pot of money, should I use this for 2 deposits or just buy one at a time?
I mean, it's okay to buy. The lower value properties tend to have a higher percentage rental yield, so it makes sense to have a number of small properties.
Yeah.
But you've got to be practical and think you're spreading yourself thinner.
Yeah.
And are they going to be in the same town? And are you going to be pulling your hair out? So I think there's a financial argument and conversation, and then there's like a real life time and stress level conversation.
Yeah.
And I think that's a call me up and have a chat question.
Yeah.
If you're just getting into it, I do one at a time anyway. Whatever you're doing, I do want to go, right, I'm going to get this off the ground and running 4 or 5 months, and then we're going to do number 2, because you always learn things, and it's like it takes a bit of getting used to the process, I think. So financially, it does make sense to go for more lower value properties.
Yeah.
Because they rent for high percentages, but it's in terms of the hours you're going to get, in terms of kind of stress levels and the learning curve, I'd go from one at a time. So call me up and ask. Yeah. Basically, devil's in the detail there, I think.
Yeah. If I'm working with a JV partner, how does it work in terms of getting a mortgage/loan for the BRR?
Okay. Easiest way to do it is bring them on. Actually, just bring them into the application.
Yeah.
And have the ownership of that property split. So if you've got a 70-30 split with your JV partner, you just split the ownership of that property 70-30.
Right. Okay.
And if you're doing it through a limited company, you can put the expenses through that limited company. That's the easiest way of doing it. There are other ways of doing it. If that person doesn't want to be named on the mortgage or can't be named on the mortgage, you can have some sort of profit sharing agreement or loan agreement in the background. That's fine too. It's just important to be upfront, tell people what you're doing. Yeah. Because they'll be fine with it. It's not a problem. Lenders know there's investors out there.
Yeah.
But yeah, easiest way is to get them on the mortgage. But the second choice is have some kind of loan agreement and tell them about it.
Yeah.
So that's my answer.
Cool. Interest rates are quite low at the minute, so what sort of buy-to-let interest rate should I use to work out whether I can still afford the mortgage if rates go up?
I like the way this person thinks. This is really good.
Yeah.
Interest rates are the lowest they've ever been, and it's not going to stay that way forever. So the government, the FCA guidelines say between 5 and 5.5%.
Okay.
Dependent. So and if you look up a graph, I mean, you might want to actually do this on your video. If you look up a quick chart of the history of Bank of England base rate and mortgage rates, you can see it tends to hover around 5%.
Okay.
But then back in the 80s, I think it hit about 13%.
Right.
So I would plan for about 5%-ish, but just be prepared for the worst. You can never totally mitigate what's going to happen in the world. Like, we might all get coronavirus next week. But yeah, 5% is going to capture most normal sort of environments.
Yeah, okay, cool. If I use a normal mortgage to buy a buy, refurbish, refinance deal, which I know I'm going to refinance within 12 months, am I committing mortgage fraud?
No.
No.
No. as a broker, I know that off sort of behind the scenes, if I do too many standard mortgages that suddenly get paid off a month later, it's going to affect my reputation with the lenders. You know, some lenders do have deals without early repayment charges, and they know that some of those will get sold within a year or 18 months. So you're not committing mortgage fraud, you're not doing anything wrong. It might not necessarily be designed for that purpose, but it's not the end of the world. I just have an honest conversation with your broker. It's like, look, this is what I'm looking to do, and that's a bit of a human judgment question. There's usually somebody I can call who I know at the lender and say, look, I think this is the situation. If that was to happen, would we still be all friends and okay? And they'll be able to check it out. But don't worry, you're not committing mortgage fraud unless you're lying. Then you're not. So don't worry.
Because on mine and Mum's first deal, we wanted to get a mortgage at first and not go through bridging, and then another bridging broker told us that it was mortgage fraud because we were planning on refinancing.
I remember. I was the guy, because I was on the other end of the phone to your mum. I remember she called me up, and well, it's funny that, isn't it? How bridging brokers, their answer is always, you need bridging. Whatever the question is.
Exactly.
Which is why I'm great, because I can do both. But no, it's you can do it. It's fine. I mean, it might be, there are advantages to bridging. It's quicker and it's a bit simpler, so it might be better to do it that way. But it's not dishonest. As long as you're not actually being dishonest.
Fraud is a strong word.
Fraud is a strong word. Fraud is a very, very strong word.
So, if I'm doing a buy, refurbish, refinance flip, would I bother refinancing? Should I just sell and avoid refinance costs?
So I mean, that's probably, to be honest. I mean, unless you're going to be renting, because you'd refinance if you really, really needed the money out now. Say you're going to pull 20 grand out of the property and you had an investment that was going to earn you 5 straight away, then great. But it might cost you £2,000 or £3,000 to refinance. Once you add in the mortgage lender's fees, the valuation fees, broker fees. In fact, let's do that. So let's say product fee, the average lender might be say £1,000, £400 valuation fee, £500 broker fee, £600 legals, so we're up to 2,400. So unless you've got an opportunity on your plate that's definitely going to earn you more than that money, then don't bother really. Although I should say the opposite, because it'll earn me money. So definitely do call me up and give me all the money.
What does it mean to pull all of your money out? Please can you explain the maths?
How to calculate how much money you're pulling out of a property and how much you're leaving in. So first thing is to get how much have you put in total. Deposit all your costs, all your renovations, everything. That's the money you've put into the property. What you're pulling out of the property is going to be, if you're mortgaging on a standard buy-to-let to 75%, you will pull out whatever the increase in value of that property is. So if it's increased by, you've refurbished it and you've increased the value by £10,000, you're going to pull out 7.5. So I'd go money in minus money out, and that's what you've left in the property.
Someone actually asked me yesterday about being a first-time buyer and putting in a 5% deposit for a house that they wanted to live in and then refinance later. Would you say that it was worth it if they put in 5%?
I think that, well, it depends, isn't it? Is it going to increase in value or is it not?
Yes, they do like a little bit of a refurb.
I mean, and are you going to refinance it on a residential mortgage?
It'd be residential because they wanted to live in it.
I mean, you could do it. You could do it. You could do it, and you would get 95% of the increase in value. So yeah, you could definitely do that. It might not increase in value. That's the only thing.
Right. Okay.
Because it might not actually work, but. You could try to get, your difficulty there is early repayment charges. Because most 95% lenders will have like a 2-year fixed deal with 4%, for example, in the first year. So if you're looking to do that in the space of 6 months, you might get hit with a big early repayment penalty.
Right.
So
okay.
it might be easier to do that over the course of 2 years rather than 6 months.
Yeah.
But maybe, there might be something there. It's hard to say off the top of my head without seeing the property.
They'd have to speak to you and say.
Yeah, give me all the money.
How expensive is bridging compared to a normal mortgage?
All right, so I would say ballpark, if you're doing your plan, I'd budget for 0.7% interest a month. I'll try and beat that. I can beat that, but I'd say aim for that. And then compared to a normal mortgage, if you're a bog standard, you'll go into a high street lender, you might be paying, say, 2% a year.
Yeah, okay.
Dependent on your needs and circumstances. Seek formal advice. But, like, it's bridging is a lot more expensive.
Yeah.
But there's a reason, and that's because it's flexible and it's quick.
Yeah. And that's why you kind of get off it quickly. Like, it's not the type of thing you have for, like, years.
No, I mean, you get really short-term bridging cases, like, will complete in 4 or 5 days, but they charge a huge amount of money.
Yeah.
And it's like other bridging lenders, they'll take 2 weeks to get to offer. Whereas a mortgage might be 6 weeks or 8 weeks.
Yeah.
And if you have a nightmare, it might be a couple of months, 3 months or something. So there's a reason, and it's one of the traps you can fall into, I think, as an investor, is knowing where to allocate your money, knowing where to try and negotiate hard on price, and knowing where to pay a bit more and just have certainty.
Yeah.
That's the thing with bridging, is you do pay a bit more, but it's like there's not a lot of room for variation. Mm-hmm. It's pretty standard, it's pretty down the line.
Yeah.
You know it's going to be completed in a month.
Yeah.
And it's all right, you might add up the numbers and go, all right, in total I'm paying £1,500 more, which is a lot of money. But as an investor, you might decide that that's easier than trying to save £1,500, but suddenly you've lost another 2 months.
Yeah.
So it's like, what is that time worth to you? What else could you have done in those 2 months?
Yeah.
And is that worth £1,500? I'd say probably it is.
And what's the quickest you've ever managed to get bridging?
Probably 2 weeks.
Wow.
I could do it. I know people who've done it quicker. I haven't historically done the really, really quick auction finance stuff.
Yeah.
Because I just haven't targeted that market. I've done a bit of auction, but not a massive amount. But I am thinking about getting into it because it sounds like fun.
Yeah.
Because you can go to some of the smaller auctions and just sit there with a sign and pick up business.
Yeah.
Like, this sounds like fun. I might do this. But you can do it really, really quick.
Yeah.
It depends on, and a lot of bridging lenders, they won't even have a physical valuation of the property. They'll just look it up online. But it's and that's why it's more expensive as well, because it's just like bang, we'll do it. Yeah.
Cool. So next question. Bridging has a bad reputation. Why is this?
It's lucrative. There's a lot of money there. I won't mention numbers, but the standard commissions that lenders pay are 2 to 3 times higher compared to a mortgage. And it's also, there's less, it's generally, most bridging is unregulated. So there's not really a lot of like FCA protections.
Yeah.
So you do sometimes get things where brokers will say, they'll mention, they'll put on a 1% fee onto the loan amount.
Yeah.
But they'll also get paid a 1% commission by the lender.
Right. Okay.
And they might confuse those two things a little bit.
Yeah.
And you think they're getting paid 1%, actually they're getting paid 2%, and then people find out later. That's one of the things that happens. It's a lucrative area, to be honest, and there's not a lot of regulatory protection.
Yeah.
I want to work with people for the long term, and I want them to be gradually increasing in wealth over 40 years. So my incentives aren't that way. But I think some people have had a bad reputation, a bad experience, and the reputation is, unfortunately, has been earned in some areas.
Yeah.
Which is a shame, because from the lender's side, there's actually a lot of very, very smart, talented people who work in bridging and can deal with things like complex conversions of semi-commercial property into residential, or complex developments and all sorts. But it's expensive and there's less regulatory protection. So trust is a bigger thing, I think, for people.
Yeah.
I'd like to be more positive, but to be honest, that's the honest response is a lot of people have had a bad experience, have paid a lot of money, and come out with a bad taste in the mouth, unfortunately. So.
Yeah, and I feel like people hear horror stories as well. Like when you go through like a bridging application, they say about like how if you don't pay, they'll take the house off you. So I feel like people get scared of things like that.
Well, so there's also a problem is because I'm both a mortgage broker and a commercial finance broker, and I do understand both pretty well. I can tell you pretty confidently whether you'll be able to get a mortgage at the end of the bridging loan.
Yeah.
Whereas a bridging broker they're not that incentivized to make sure you're going to be able to get out of it.
Yeah.
Whereas I am actually, because there's a bit of extra work for me at the end if I get the refinance on it. So it's really, really important to always make sure you have a decision in principle for a mortgage in 6 months' time.
Yeah.
Criteria can change in 6 months, but be as sure as you can possibly be. I think that's one of the potential horror stories you want to avoid, is being on a bridging loan, paying a lot of money a month, and then finding out that actually for some reason the broker hasn't understood that your earnings aren't enough to get a mortgage or whatever it is, and being stuck.
Yeah.
You either need to sell the property or get another bridging loan, which is going to cost even more. So that's the sort of thing that happens.
Some solicitors won't work with you if you're using bridging. Why is this?
So I checked this out because it's weird, really, isn't it? It's sort of a bit. There isn't as far as I can see, there isn't an actual legal reason for it. There's not a difference too much of a difference in the process. It's viewed as like a specialism. Right. So as you get some mortgage brokers who won't do cases with bad credit, that's viewed as a specialist part of mortgages. It can be viewed as a specialist part of law. I think that bridging loan works 3-4 times quicker than a mortgage. And I think the reality is, if you're a solicitor who's dealing with mortgages that are working on you're dealing with 10 cases that are working on certain timescales, and your business is set up to do that, and then you're getting one bridging loan that needs to be done every time there's an email, you need to go back on that email within 20 minutes. Yeah. Those two things sort of clash. And I think that's why a lot of mortgage brokers actually do one or the other. Yeah. Because it's hard to get your business working, to manage both timescales. It's trying to play two different games at once. Right. I think that's why. Yeah. Okay.
How soon can I refinance my buy refurbish refinance deal after buying it? I've heard there is a 6-month rule in terms of refinancing.
There is, but it's going out of fashion. So a year ago there was maybe a couple of lenders who would do day one remortgages. Yeah. I've now got 7 or 8, so you can do it pretty dependent on circumstances, but I can do it day one.
Yeah, cool. Do I need to already own my own home to get a buy-to-let mortgage? I've heard some buy-to-let lenders want you to be a homeowner before they lend to you and have a minimum income level. Please explain.
Yeah, so that's correct. On the more conservative end of the spectrum, that is correct. Traditionally, you need to be a homeowner before you can get a buy-to-let mortgage. And before you can get a HMO mortgage, you need to have had a buy-to-let for 12 months, so you're an experienced landlord. But there are more and more exceptions to that now. You could get a buy-to-let mortgage as a first-time buyer if your income is enough to pay that mortgage from. Yeah. Standard first-time buyer buy-to-let. If it's not, you could buy it on a bridging loan and then refinance it a few months later. You could just buy it and rent it for a few months until the lender's comfortable that you're not going to make a mistake, and then just refinance onto a standard buy-to-let. And there are buy-to-let lenders. Once you're on the ladder, there are plenty of buy-to-let lenders who have no minimum income. Yeah. Cool. As a rule of thumb, behind the scenes, most of the no minimum income lenders will do a quick calculation and say, if this property is vacant for 2 months, can they pay the mortgage? Right. So we'll do those numbers manually to kind of mimic that process. Even if you fail that, there are 2 lenders who are don't do those. Don't do those calcs. There's ways around it. It depends on what your attitude to risk is like, what your life situation is. Do you want to be on the more conservative or more riskier, potentially more profitable end of the spectrums? It's up to you as an investor.
Yeah, cool. Next question. Will I be able to get a HMO mortgage as a first-time buyer?
No. No. But I could do a workaround where it's the same thing, where it's buy on a bridge, hold it. Hold it maybe as a single let for 6 months and then refinance it onto a HMO.
Right, okay.
There's only 2 lenders. Most HMO lenders will say you need a year of landlord experience before we will lend to you as a HMO. So that's your conservative end. It would be buy a single let and hold it for a year and then refinance it onto a HMO. Your more sort of workaround end is buy it on a bridge and then refinance it. There's a couple of lenders who will, as long as you're a property owner, will give you a HMO mortgage.
Yeah.
So you could buy it on a bridge according to criteria and then refinance it 2 months later onto a HMO. There's a bit of reading between the lines.
Yeah.
Because you can fit the criteria and you can tick the boxes, but at some point a human underwriter is going to look at the case and they might go, very funny, thanks very much, but goodbye. So there's a bit of reading between the lines there. I'd say, look, you get it on a bridge, hold it for 6 months, rent it, and then refinance.
What sort of buy-to-let mortgages are there for large 7-bed HMOs, for example?
So most HMO lenders have a limit of 8 bedrooms. So actually, that's larger, but it's not out of this world.
Yeah.
Above 8 bedrooms, if you're up to 10, there's a couple of standard HMO lenders. You can do HMOs of, without limit for a couple of very specialist lenders.
Yeah.
Their interest rates are a bit higher. They're not too bad actually, but they will be more careful about who you are and your experience and your ability to run that thing. I mentioned this in your last video, the biggest one I've done was a multi-unit and a HMO in one thing, where it was 3 apartments on the ground floor and then an 8-bed HMO above it.
Yeah.
So it was 14 bedrooms in total across however many, what's that going to be? 11 different tenancy agreements and all that. So, and that was mental. But there was a lender who would do it, and that was a first-time landlord.
Yeah.
But it was the person was obviously an intelligent person who was a professional project manager in construction, so we can make an argument there.
Yeah, okay.
So you can do the large HMOs, definitely. You've got to be realistic about what you're taking on, but I can probably place it.
Yeah, cool. So, a lot of people talk about using other people's money. Can I borrow money from anyone? What are the rules about who you can borrow money from and the terms?
So, if you're getting a bridging loan and you've got an investor, I can process that, I can do that. If you haven't got skin in the game, quite rightly, banks are a lot more careful about lending to you because they want to know that you've got hurt money, so to speak, that you're going to be, you're in it. Like with any business, they want to know that you're putting your wealth into that before you can get investment. So can I do it? Yeah, I can. It's harder for mortgages. It's an absolute no. Yeah. Like no way. So you could have a situation where you're buying on a bridging loan and you're putting a load of money into the property and increasing the value of that property and then refinancing it to pay off the investors.
Yeah.
But you've got to be. It's like with anything. You can be on the more conservative end of the spectrum. It's just use all your own money, don't deal with investors, and do it the simple way. The advantage there is that does work. We've got decades of data on that will consistently work, and we know where your sort of safe limits are. There is the riskier end of the spectrum. I have friends and family who do dabble in this sort of thing. But just be aware of what you're doing. There's a lot of you do sometimes get people on YouTube saying you don't need any money, I can do it for free.
Yeah.
I don't believe them.
Yeah.
And I don't believe that they've done it either, to be honest, a lot of those blokes. But So you can physically do it, yeah. But it's a conceptual conversation, which is how much risk do I want to take on. So have that conversation first, and then decide on what your method is.
Yeah.
If the issue is really I haven't got any money and then I haven't got any choice and this is how I'm going to do it, you might decide that it's better to go, all right, how do I get myself in a position where I've got money to do this in the first place?
Yeah.
So I'd have a think. I mean, look, I'm a younger person, and I will be, I might end up moving into development at some point, and I haven't got kids, and I might take some risk, but I've got an income elsewhere. You got to balance it. You got to balance it. And I think as a broker, when I get those calls, which I do, that I shouldn't tell you this, but the unofficial story is I have to make a call on whether I actually want to be involved with their person or not.
Right. Okay.
If I think they're going to get into a mess, I will say to them, sorry, I'm not going to do it.
Yeah.
And I won't say. I might say it's because I think you're going to get into a mess, or I might say I just don't think it's for me.
Yeah.
Because it's, I want people to do well. But I have done those deals, and some of them worked out very well. But it's that sort of thing. Sometimes you get tempted into it when you haven't got any money. But it's most appropriate, oddly, for people who are really rich and they've got a lot of money, and they can and their money is, say, tied up in other developments. And you get, there are joint venture products out there that I've got for experienced developers where they can literally do a new build development of 2 or 3 million without putting a penny into it, with a straight profit split.
Yeah.
So those models are there designed for that, but they've got the ability to take on risk, because that person might have a net worth of 10 million or something.
Yeah.
So if they end up owing a bank $1.5 million, all right, they'll have to sell a bit of the portfolio, but they'll survive. I would really, really not want anybody to get into the state where they've borrowed more money and the economy's crashed, and then they've got to find how to pay people off.
Yeah.
So 6 and 2 threes. I mean, it's like a lot of this stuff. It's hard to say in general terms, but we've got to decide where you fall on the spectrum, and then the professional involved has to decide whether they agree with you and whether they're going to help you.
Right.
If you're finding you're calling people up and you're getting interest, and then people go a bit cold on you, and that's happened a couple of times, take that as a sign that you might be missing something.
Yeah, definitely.
That's unofficial broker behind the scenes chat there. So don't tell anybody on the internet.
No.
No.
Right. I want to do a commercial to residential conversion, but I've heard about deals falling through because buyers can't get financing on commercial properties.
Cool.
Is it harder to get a mortgage on a buy refurbished refinance for a commercial property?
Yep. Doesn't mean you can't do it though.
Yeah.
It's harder to get a commercial mortgage, like a long-term 20-year commercial mortgage. It just generally is.
Yeah.
It's a higher interest rate, and there's more specific criteria, and it's a different world.
Yeah.
But most likely you will be able to do that, but call up and see. For that situation, you don't need a commercial mortgage, you need a bridging loan.
Yeah.
So if you're converting from your conversion scheme from commercial to residential, planning will probably approve it, because they need more resi out there at the moment. You just need a bridging lender who understands it. There are a few of those. Some of them won't want to go near it because it's a bit complex, but there's 5 or 6 off the top of my head, and probably more than that if I get on the internet and have a look.
Yeah.
So yeah, I just get a straight bridging loan. It's not going to be too bad.
No.
Your LTV will be limited to 70% probably, because it's commercially. Other than that, you're all good.
Yeah, cool. So how hard is it to get development finance?
It is harder because it's a very specialist product.
Yeah.
And it's a product that was not available until quite recently for loans under 1 million or £500,000.
Right, okay.
There are still development finance lenders out there. There's one that I know that has a minimum loan amount of 10 million. So it's investment banking.
Yeah.
It's an investment banking product. And the reason for that is that lender is taking using the valuer's opinion and their own judgment to say this property will be worth X amount when it's done.
Yeah.
It's much more specialist than going into a property that's already built and saying, okay, this is what it's worth. However, it's a very good time. It's probably one of the best times to get development finance now.
Yeah.
You can now get it as a first-time developer, whereas you couldn't 2 years ago. Lenders are still pretty sensible. They learned a lot from 2007.
Yeah.
The market completely closed down after that. It didn't open again until it started to slowly open up in kind of 2012, but like through back channels. But now it's like you can deal with first-time developers, you can do cases under $500,000. What it's really good for is if you've got a property that's a pretty heavy like a conversion project, or it's got a lot of build cost. You're buying for 200, but you're putting 100,000 in, and it's going to be worth 500,000 when you're done. That's the sort of thing you want for development finance.
Yeah. It's
cases with a lot of build cost, where you've got cases where it's a little bit. You're putting 20,000 in, and you're buying for 200. It doesn't tend. The numbers don't tend to stack up that well.
Yeah.
But if the fundamentals of the case stack up, and I wouldn't advise anybody actually to even try and run their own numbers, because even the numbers themselves, it's not just like loan to value. They've got about 4 or 5 different risk ratios, and I'll waffle on in a minute about that. But you can do it, but you need a good broker.
Yeah.
And it is a specialism, so you need a broker who's dealing with a number of different lenders. But you can most likely do it. It's all about, does the end value justify lending build cost?
Yeah.
Is it enough, and is it going to be enough if the valuer says it's 10% less than you think it is?
Yeah. So in terms of I'm trying to think how to word this now. So if you're stacking a deal, what sort of percentage profit would you be looking at to get development finance, if that makes sense?
That's a really good question. So on a refurbishment, between 10 and 15%.
Right, okay.
On a new build, between 20 and 30%.
Yeah, because I guess if you've stacked your numbers and then it's okay, you're going to be 5% profit, they'll be well, that's risky, because if you don't make that...
Exactly.
Right,
exactly.
Okay.
So I was dealing with a case recently that had exactly this problem, because it was the value for those clients was holding on to the property, not really the development itself.
Right,
so
okay.
I was able to place it, but the likelihood of lending build costs in that scenario is not high, because they've got to with development finance, they look at that project over time. If it's over 12 months, they'll look at it over the 12 months and go, all right, on month 3, we'll have put 200,000 into the property, and at that point it will be worth approximately 300 grand. Okay, we're great. Oh, it's actually, or maybe it'll be worth 220 grand.
Yeah.
At which point they start talking about haircuts. They call that haircut territory. Needs a haircut. I don't know why, but that's what they say. So they look at because they have to assume, all right, if you get hit. Excuse me, but if you get hit by a bus in month 3 and they have to take over that project, could they sell it on? Could another normal developer just come in and finish it off?
Yeah.
It's not like with having a mortgage where they repossess it and just auction it.
Yeah.
It's a lot more complex.
Right. Okay.
Did that answer your question?
Yeah.
Answer a different question.
Yeah.
Cool. It's really good product. It's really interesting. It takes a higher level of analysis on the front end.
Yeah.
You've got to get your numbers straight, and you've got to be really almost a bit cynical about your own valuations.
Yeah. Well, you've just got to be very conservative.
Yeah.
It's not hopeful.
Well, exactly. And but they'll, the lenders are very good at this. They will put in, they'll calculate your build costs themselves independently, or they'll get a valuer to do it. They'll also check the value of the site now, and they'll get a valuer to check on the GDV. So you've got 3 things there. Each one of those could differ from your numbers.
Yeah.
Whereas with mortgage, it's okay, what's the value?
Yeah.
So you can see straight away how there's going to be different opinions on things. but the lender, it is really useful actually. It can be very, very annoying sometimes for people to have somebody else say, have a different opinion, but you're either right or you're wrong, and having that third party can be a really useful process to let you know that you got it right and it's going to go ahead, because it's their money. And a lot of these funders, some of these funders are funded by sort of banks and pension funds. Some of these are actually just rich individuals, and they've started. So there's a lender up north who I use sometimes, who was started by a guy who owned a popular gambling company, and then sold his share and just started a lender. So it's his money, so he's going to really be careful about where he's putting it. It's just, you've got to do your numbers properly, and they will assume they'll put their own level of contingencies on the build cost. They might add, say, 10 or 15 or 20% to the build cost, all those things, and they'll assume it's going to overrun. And but they do know what they're doing, and they are very, very smart people. So I really like the product, and I think it's something that's it's quite creative really, because you can build stuff with it, which is great. But it's another level. Yeah, definitely.
And have you got any tips for anyone who wants to go down bridging or development finance?
Yeah, find a broker that you trust. I think trust is more important than price. Do your research by asking people. You don't need to ask loads and loads of people. You just need to ask a few who are qualified to tell you. Because the information changes really quickly. Criteria changes month to month. So I'd have a conversation with a couple of different brokers and see who's informed, who actually has up to the minute information, and B, who do you trust and get along with. It's not regulated, so you haven't got that government protection, and it's a personal business really. And I'd also think, who's motivated to just sell me a bridging loan and get out, and who's motivated to keep me long term. I go for that guy. Which weirdly is me. What a surprise.
Shock.
I know. Well, it's true. I mean, it's I do want to sell. I do want to do business. But I've tried to set it up in a way that I'm not gonna. I feel honest about what I'm doing.
You're not just like taking for the sake of it, kind of.
No, I mean I can't. I mean I'm no good at that anyway.
Cool. Is there anything else you wanted to mention?
No. I think just find people you trust. There's professionals out there who will happily give you plenty of information for free on the off chance they get a bit of business, and I'm like that. I'm always happy to have a chat. You can sometimes spend a lot of time reading on things on the internet, and the quality information can be very good, or it can be a bit of out of date. So call somebody up, have a chat.
It's good that you've said that actually, that like you'll sort of give a little bit of information for free, because I get people asking me about like bridging loans and mortgage advice, and I'm like, I'm not qualified to talk about this. So
it's for me, I know sort of what I'm talking about, and I don't need to sell it, because people call me up and ask me, and I might talk to somebody for a couple of months before we do any business, and I've done that. For some people it's been a year or something. I'll speak to them once every couple of months. And it's fine. It's absolutely fine, because if I end up winning a client who's going to stick around for 10 years, fantastic. It's no problem at all. And it's a relationship building exercise. People get a feel for me, what I'm like, and what I'm doing, and I think a lot of brokers are like that.
Definitely. Cool. So if people need to contact you, where should they go?
I check out my website, which is upliftfinance.co.uk. Number and email and contact details all on there.
Cool. And I'll make sure that I leave a link in the description bar below, so you can check out Edward's website. But thank you so much for coming on again.
Thanks very much for having me.
If you guys want me to do another video with Edward, then just let me know. Give this video a thumbs up. But thank you guys so much for watching. Make sure you follow me on Instagram at Leah_Miller, and I'll see you next time. Bye.
Bye-bye.
We've got a long again. I keep getting like more of me in the frame and like not the other person.
It's fine. You're the host, right?
Is there a certain type of... I don't know why I'm smiling.
It's alright, because I'm like charismatic.
Your eyes like the sunshine on my face. It's a good night, how you smells nice on a pillowcase. And I love when I see you walking by. I know that life ain't perfect, but you make it alright.